Hey, good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, August 28th. Wow, the summer's gone by really fast here, hasn't it? We're going to jump right into it. We got a few economic news releases scheduled for today. We'll start off with the weekly jobless claims. So last week we had 299,000 people applying for unemployment. The forecast for this week was 300, and it came in just shy under. This is kind of important. As we've been seeing jobs improving, we've been slowly, gradually seeing fewer and fewer people applying for unemployment. And now that number looks like we're kind of getting the range just under 300,000 people applying for unemployment on a weekly basis, which is obviously a very good sign. The problem is, of course, a lot of these people are taking part-time jobs, want full-time jobs, and they're just not quite available yet, but are settling with part-time jobs, therefore not qualifying for unemployment. But again, at least something's happening a little better than we were a few years ago. The second revision for the GDP came out today. The final one will be out next month for the second quarter. So the initial one was at 4%. The forecast was supposed to dip slightly down to 3.9 and actually went up higher to 4.2. So this is something to definitely keep an eye on. But you got to also factor, remember we had a negative during the first quarter. So if you even take up both of them, we're basically at a still very, very, very modest pace if you consider first quarter blended with this. All right, so and then we got pending home sales. We had a negative number back in June, and July actually jumped up 3.3%. So good July numbers here, especially after the negative in June. Let's go ahead and take a look at the headline news. And currently, the stock market's down. It's not so much because the economic data. Because it's down. Obviously, we had some good data there. It's primarily because of reports of Russian soldiers entering Ukraine and even taking over one of the cities there in Ukraine. So this has people a little bit on the jitters right now. And also some numbers or data came out on the various countries in Europe on the individual level. And it's really looking like they could be facing deflation in the Eurozone. So this is something to be concerned about because sometimes we get kind of dragged into those as well, and then also Asia will face the same thing. So this is something also to be on the wary. But the biggest thing is it's more geopolitical with the Ukraine-Russia situation is what's weighing on the stock market. So let's see how this is faring, and it's actually faring quite well for the bond market. As you can see, the bond market's up quite a bit here. So we're getting an improvement in the interest rates today. So great news, not great news for the stock market, and obviously those in Russia, Ukraine, which is leading to what we're seeing today. But the bond market, which is up, which tends to bring interest rates lower. All right, folks. Hey, thanks for watching. I hope you guys have a wonderful day. And then stay tuned tomorrow. We will have some more important economic data being released tomorrow. Also, with the situation going on in Ukraine, don't be surprised that we could see, with a long weekend coming up, that we see a nice rally in the bond market and maybe even sell off a bit on the stock market as a result, because the bond market is considered to be a flight to safety. So don't be surprised if we see an improvement tomorrow with the long weekend ahead, especially with the high tensions going on with Ukraine and Russia, and then also Russia threatening to cut off gas to Europe and Ukraine. All right, folks, have a wonderful day. Thanks for watching, and again, we'll see you tomorrow.